Hey everyone, welcome back to Corporate Decoder. In this video, we will talk about T. Rowe Price Group's latest earnings report, essentially how they've been doing financially. Prepare for some juicy insights because we're about to decode what these numbers really mean for the company. Do you ever wonder what happens when a giant investment firm reports its financials? Well, today we're going to find out if T. Rowe Price is still riding high or if there are cracks in their golden facade. Before we dive in, if you like getting straight, no-nonsense insights from these dense financial reports, make sure you've hit that subscribe button. And if you want to connect with other finance and business enthusiasts, join our Discord community. It's linked right down below. So, T. Rowe Price is putting out an official report, a Form 8K. Think of this as a company's way of telling the world about significant events that have happened or are happening. In this case, the big news is their earnings release for the 3 and 6 months that ended on June 30th of 2025. T. Rowe Price is a name many of you probably recognize. They are a major player in the investment management world, handling billions of dollars for individuals and institutions alike. They've been around a while and are known for their focus on research and long-term investing. The key takeaway here is that on August 1st, they released their performance numbers covering the previous quarter and the first half of the year. This is where we get the real meat of their financial health. It's like getting a report card after a period of hard work. Now, why is this important to you as a potential investor or just someone curious about how big companies work? Because the financial results tell the story of their success or struggles. They tell us if they are making money, where that money is coming from, and how they are managing their expenses. And for T. Rowe Price, the ultimate measure of their public performance is how their stock does on exchanges like NASDAQ. Investors watch these reports very closely to decide whether to buy more shares, hold on to what they have, or sell. This report is dated August 1st, 2025, which means they are reporting on the period ending June 30th, 2025. This gives us a snapshot of their business from the spring and the first half of the year. Now let's get to the really interesting part, the actual financial results they are sharing. The actual earnings release itself is attached as a separate document, Exhibit 99.1. This is where all the detailed numbers are presented. While the 8K itself summarizes it, the earnings release is the unfiltered look at the performance. This section is all about how the company is doing financially. They are telling us how much money they made, how much it cost them to make it, and what's left over. It's the core of their financial update. When companies report their financial condition, they are basically showing you their financial scorecard. It includes things like earnings, revenue, expenses, assets, and liabilities. It's essential for understanding how healthy the business is and its potential for future growth. And who officially signs off on this news? Jennifer B. Dardis, the Vice President, Chief Financial Officer, and Treasurer. That's Jennifer's stamp of approval, confirming these numbers are accurate and represent the company's official reporting. It's her job to make sure the financial story the company is telling is true. Let's imagine we're looking at the actual earnings release. For a firm like T. Rowe Price, the most critical numbers usually revolve around assets under management, or HOM, the revenue generated from managing those assets, and their profitability after expenses. If we saw their assets under management, we'd want to know if that number is growing or shrinking, because for an investment manager, more assets under management generally means more fees earned. A significant jump in AUM could signal strong investor confidence and successful fund performance. Conversely, a dip might mean investors are pulling money out, perhaps due to poor performance or market conditions. Then there's the revenue. T. Rowe Price makes money primarily through management fees charged on the assets they manage. So if their revenue is climbing, it means they are either attracting more investors, their existing investors are putting more money with them, or the value of the assets they manage has gone up, leading to higher fee income. If revenue is falling, it's a red flag that could point to investor outflows or a decline in asset values. But revenue is only half the story. We also have to look at their expenses. Running a massive investment firm involves significant costs. Salaries for thousands of employees, research, technology, marketing, and regulatory compliance. If their expenses are growing faster than their revenue, their profits will suffer, even if the top line numbers look okay. This is where you see if they are efficiently managing their operations or if costs are getting out of control. Let's say, hypothetically, their earnings release showed a 10% increase in revenue. That sounds good, right? But if their expenses jumped 15% in the same period, that 10% revenue growth is actually leading to a decrease in their overall profit margin. It's like your salary going up by 10%, but your rent and other bills go up by 15%. You're bringing home more money, but you're actually worse off. We'd also analyze their net income. This is the bottom line, the profit after all expenses and taxes. If their net income is growing steadily, it shows they are effectively converting revenue into profit. A declining net income, even with rising assets under management, would suggest operational inefficiencies or increased competition eating into their margins. Think about a competitor like BlackRock or Vanguard. How do T. Rowe Price's numbers stack up against them? If T. Rowe Price is growing slower than its peers or its profit margins are thinner, it might indicate they are losing market share or struggling to compete in a very dynamic industry. The report also mentions emerging growth company status. For T. Rowe Price, a well-established company, this is likely not applicable. They are not a startup trying to find its footing. They are a mature business with a long track record. Now, sometimes these reports contain more than just financial numbers. They might touch on strategic initiatives or outlooks. For example, if they are investing heavily in new technologies or expanding into new markets, that could be a sign of future growth, but it also means higher upfront costs in the short term. It's also important to understand how T. Rowe Price makes money. It's not like selling widgets off a shelf. They are custodians of wealth and their earnings are tied to the performance and flow of financial markets as well as investor sentiment. So when markets are volatile or uncertain, it can directly impact their business. Looking at this filing, the core information is their earnings release. This is the critical part that tells us how T. Rowe Price performed in the most recent quarters. The 8K is just the casing, the formal notification that this information is now public. The real story is within that earnings release itself. It's where we'd find the specific figures for revenue, profit, assets under management, and likely commentary from management on what drove those results and their expectations for the future. So to sum it up, this report is essentially T. Rowe Price saying, here's how we did in the recent past. The crucial context is understanding the numbers within their earnings release, seeing if they're growing, how efficiently they're operating compared to their own history and their competitors, and what that means for the future of the company and its stock. Now, looking at these results more broadly, T. Rowe Price is a veteran in the asset management game. Their strength lies in their established brand and their long-term investment philosophy. However, the industry is perpetually changing. Increased competition, the rise of passive investing, and fee compression are constant challenges. If their earnings continue to show solid growth in assets and profitability, it signals they are successfully navigating these headwinds. If not, it could mean they are facing more serious structural issues. The key is always to look beyond the headline numbers and understand the underlying trends and competitive positioning. Alright, that's our breakdown of T. Rowe Price's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.